Welcome to the JWK show. We talk about crypto and we keep things short and concise. Eventually, just like every single bubble, we will see it popping and the crypto AI market all collapsing down. But just before that happens, we do have one more squeeze, one more pump in the markets, and this will be the biggest pump, biggest squeeze we have ever seen. But we do have the end game being confirmed by we can see institutions like S&P building stability assessment frameworks to evaluate the strength of stablecoins. And in this very accurate report, we have Tether given a rating of 4 on a scale where 1 is the most stable and 5 is the weakest. So with Tether USDT receiving a rating of 4, this means they are a major risk stablecoin. It is not safe to use, yet it is the biggest stablecoin out there. So that is a major problem, as we have the majority of the liquidity tied up in a scam stablecoin. And so if we see Tether USDT depegging and going to 0, losing its $1 peg, we will see the entire crypto market collapsing. So this is a massive deal that a lot of people are not talking about. And this will essentially cause the entire crypto bubble to pop. Tether depegging, collapsing will cause Bitcoin, Ethereum, 99% of cryptos to go to near 0. So we do have the S&P highlighting major risks, including credit markets and interest rate risk, and a lack of transparency regarding its reserves. So we don't know if USDT is actually backed one-to-one, and we have seen a ton of money printing going on from Tether USDT. They are essentially acting like the Federal Reserve, even though they are not. Now we do have the response from Paulo. You guys can pause the video and take a look from the Tether CEO. And we have Tether's CEO Paulo Ardenio firing back at S&P after its Tether rating, saying the agency's legacy models failed investors for decades and that Tether is overcapitalized with no toxic reserves. So according to the Tether CEO, USDT is backed more than 1-to-1. But we have Tether promising a full audit of its stablecoin reserves for the past 8 years, yet a full audit of Tether reserves have not been provided even after 8 years, right? So it seems like Paulo is actually lying, as there is no physical proof of Tether actually being backed 1-to-1. But we do have Tether sitting on $10 billion in Bitcoin and over $13 billion in gold, more than some small central banks. So guys, don't get it twisted. Yes, Tether still has a ton of liquidity, but not enough for every crypto investor to cash out. And meanwhile, we do have regulated stablecoins like USDC and RLUSD not allowed to do that. And we do have, instead, by design, their reserves are within guidelines. We have cash plus short-term U.S. treasuries. And we do have monthly attestations happening for the RLUSD, so fully transparent, fully backed 1-to-1. And according to the reports, it is actually backed more than 1-to-1. So the RLUSD is one of the safest, if not the safest, stablecoin to use. And the reason why we have the RLUSD only backed by cash and short-term U.S. treasuries is because these are the U.S. rules set by the Genius Act and NYDFS. This is what they demand. No Bitcoin, no gold, no leverage garbage behind a stable dollar. We don't want a stable coin being backed by volatility. And also, if Tether was comfortable with full U.S. regulation, why are they launching a new coin, USAT, from 0 instead of just putting USDT under those same rules and audits, right? It doesn't make sense. Why start from scratch when you are the biggest stablecoin already? So a lot of sketchy things going on, but the only big thing, legitimate thing going on is Poe Hines from the White House joining Tether, but we also had FTX, Terra having big names as well. So A fancy resume never guaranteed the reserves were real, so guys, please be careful. And as we've been saying for a very long time, Tether will collapse the markets, so stay away from Tether. Please be careful. There will be a rug pull happening, a liquidity crisis with USDT. Now, we do have from the Federal Reserve Conference on stablecoins, let's digitize the economy and we'll allow for new players. Let's take a look at this. We have the Federal Reserve fully adopting stablecoins, gladly adopting stablecoins.
An exogenous event that's not correlated with other activity in terms of the use of cash and so on. And then secondly, so we obviously don't want to encourage bank robberies, but in terms of policy recommendations, would you go so far as to say that these results suggest that policies that in some sense hinder the use of cash are good policies?
I think I can say it's hard to say the external validity of this, but what happens in Brazil is that we have this very concentrated market in traditional banks, right? And we have these huge fintechs. Like, so for example, one of the fintechs now is the second largest bank in Brazil. So it was this cash dependence, this decrease in the cash dependence could be a good way to increase the competition. So I think it's more about like let's digitalize the economy. Now we have different players. Different players are able to enter the market, and that's a good thing, right? It would be increase the competition. I'm not saying that let the robberies happen. It's just that let's digitalize the economy, and this eventually is going to happen, right? About the rationality of the banks, I think if we just run a regression on where banks close.
Big stuff. We have alerts. Coinbase is experiencing an outage causing delayed transaction sends for some users, and we do have MasterCard also saying Bitcoin and crypto are entering a new era of clarity and confidence. That's it for the video. Hope you guys enjoyed, and I'll see you guys in the next one.